Good evening, everyone. Welcome to Hit the Bid here on July 12th. This is Ty Robbie here with your Week 28 Market Watch. Today, we're going to run through our charts and see what happened in these markets over the last week and see what we need to be ready for as we head into Week 28. So, let's jump in and get started. First up, we got our August live cattle on the board. We did see this cattle market lose some more ground last week. Both live and feeder prices continue to slip as we did see some selling pressure all the way into Friday's session. This August live contract did give up that 200-day moving average early in the week before undercutting June's low down here at 234 on Friday. We did just see a nice little quick poke down there below that level before finishing the week at 235. Looking like this is just a nice little liquidity grab here at the moment. We should see the bulls trying to continue to defend these range lows like we've seen them do here over the last 3 months. At the moment, we expect to see this range bound action continue here and see this live cattle market remain pretty sticky here between about 230 and 250. We do see these back months here, October 26 all the way out there through April 27, finding some decent support down here around 230. They are discounted a little bit compared to that August live contract, but still seeing this 230 to 250 area be pretty sticky here for this live cattle market. We expect to see that action continue. This market has seen a pretty big markup here over the last couple of years, and seeing this thing just kind of hang out up here near these all-time highs is a good sign of health for this market. We want to see this thing digest these higher prices, get comfortable up here, and eventually work our way through 250. And once we're able to do that, we should see this thing take another run higher. But at the moment, we are seeing this market just stay pretty comfortable here in the area. We expect to see this 230 to 250 price point remain here for this live cattle market. Early support, we want to see this market find some early support in the week ahead. Good stability here, some tighter daily ranges showing that this market is able to continue to see some buying activity down here in the 230s. Is going to be good signs to see early in the week. We just want to be patient here, make sure this market is able to find its footing before we start to get too aggressive. But we should see this market try and take another run back up here through the 240s here in the week ahead. Any sort of nasty closes down here below 234 to 233, which is last week's low, will signal some more selling pressure. So be cautious here as any sort of heavy volume closes down here below some of these key levels could give us a nice little dip down into the 220s. But at the moment, we're just going to have to wait and see if this market is going to see any sort of breakdowns. But we should see the bulls try and offer some support here in the week ahead and keep this market range bound. Next up, we got our August feeders on the board. Last week we saw this market trying to find some footing here between about 355 and 360. Nice back and forth action, seeing some wide daily ranges here last week, a little bit of increased volatility, but still seeing some good buyer pushback off of these range lows. This feeder market remaining pretty sticky here between about 350 to 380. We got 352 and 78 here on the board, but pretty much just round numbers sake, 350 to 380 is the range here for this feeder market. We expect to see the bulls muster up some more support here in the week ahead as long as 350 is able to hold. We should see these buyers try and take another run back up at 370 and see this range bound action continue here for this feeder market as well. Any sort of breakdowns below last week's low or this 350 line, we could see a pretty quick dip down here into the 340 to high 330s like we've seen here a couple times so far this year, dating back to March and this dip we saw back here on the beginning of June, that is. So any sort of breakdowns below 350, we could see this thing kind of speed up, have a nice little quick poke down there. Expecting to see this range bound action continue here, but once again, just be patient here. We want to make sure that these feeders are able to find their footing here, stabilize a little bit, see some tighter ranges, and we should see these bulls try and take another run back up there towards 370. Expect to see that range bound action continue until this live market gives up 230 and these feeders give up 350. In the meantime, we should see these prices remain pretty sticky up here just off these all-time highs. Next up, December corn futures on the board. We did see an early breakout last week as this market snapped back above this 20-day moving average, taking a nice run right up there to that 200-day. A little bit of a rejection there before Friday's finish back up here at 460. This market seeing some good buyer pushback and so far a nice little gap higher here into the Sunday night open as well. We are trading all the way up here nearing 470. Any sort of bids above this 200-day average and last week's high at 465. Should see a little bit of a burst higher here. This corn market isn't really expected to see any major uptrend starting from here, but just seeing a pretty sticky price point here between we're right around $4.50 for this corn market. Just seeing a little bit of volatility given some news and stuff whatnot recently, so we just could see this market kind of seeing some choppy wide ranges. Nothing that we're not used to here in this corn market. We have seen this thing be pretty sticky here around $4.50, so we don't really expect to see that change. This corn market doesn't look super directional here in the near term. Just look to see this thing continue to bounce around here around $4.50. Next up, crude oil prices getting a little bit of snap back off of those oversold conditions last week. This market seeing a nice little bounce out of the 60s back up here to that 20-day moving average, getting a little bit of help from the news. But this market was getting pretty oversold here, testing some key support levels dating back to the breakout of this whole Iran conflict back here in the mid-60s from earlier in the year. So just all those perfect conditions got this little bit of a bounce going. We are seeing this market get marked up here in the Sunday night open here as well. Any sort of bids above last week's high at 76 should see this thing poke back up here towards 80 to the low 80s. We do expect to see a lot of these this overhead supply keep the lid on this market, not expecting any sort of major breakouts, barring any sort of escalations over there in Iran. But in the meantime, we expect to see any sort of rallies continue to get sold into. Any bids back up here above 76 could see a pop into the 80s, but look for those sellers to get active again if we do get up into this area, as we got a lot of resistance overhead still. The sellers are still in control of this market. We just see this thing kind of bouncing off these oversold conditions, off these extended levels to the downside. But we do expect to see this market run into some resistance up here and continue to bleed these crude oil prices back down here towards $70, where this market likes to be. Next up, equity markets kind of seen some mixed action last week. We did see the Dow moving higher early, putting in a new all-time high early last week, but seeing a pullback there, trying to find that 20-day moving average. Did see a little bounce here on Friday. Each of these indexes seeing a nice strong close into the finish on Friday. So far, Sunday night futures selling off here a little bit, but still seeing some constructive action. We are still seeing some pretty mixed action here amongst these mega cap names, these big components, these big pieces of the puzzle here. Still seeing some mixed results, but constructive action nonetheless. Nvidia seeing a nice strong close on Friday, back above their averages. Apple's been holding up here near these all-time highs. Some of these other guys are kind of hanging out here around these averages, chopping up, but still seeing some constructive action, looking like we're getting some bases built here, but it's just going to take some time to play out. In the meantime, these indexes are digesting this huge markup we've seen here dating back to the late part of March here, all the way through these recent highs here in June. So far, we have seen this market remain pretty sticky though here over the last 2 months, as this thing has just kind of been hanging out on the S&P up here between about 74 and 7,600. The Nasdaq seeing more volatility here as that tech sector has been hurting, while the Dow, well, not necessarily hurting, but just lagging a little bit, consolidating and digesting this recent markup. While we do see this Dow continue to just see a nice slow steady march higher here, seeing some of these industrial names having some good relative strength, while those tech names are digesting all the big gains here that we saw to start the year. So I expect to see some choppy action here amongst the big mega cap names while they find their footing, build some better bases here. This market still remains in a very healthy environment, just being a little bit more selective here right now. We aren't seeing as broad gains across the board like we were here in the spring and early summer, but at the moment we expect to see these indexes remain pretty sticky up here just off of these all-time highs, not seeing any major breakdowns. We want to see some more constructive action from these mega cap names, and then we should see this market get that uptrend back on track here. But at the moment, look for some more choppy action here in the week ahead. That's all we got for this week so far. We will catch you guys tomorrow night for closing comments. Thank you everyone for tuning in. Have a good night.